Hello everyone, welcome to the ichimokucharts.com daily analysis for the SP 500 for Monday, August the 23rd, 2010. Well, a change of trend today, and we have a candle with a higher high and a higher low. Unfortunately for the bulls though, they lost commitment throughout the trading day and the market closed down at the low of the day. Now that's a fairly bearish candle for this market. So even though we have a candle making a higher high and a higher low and changing the trend to the upside, we have a slightly larger red body, which means that the sellers have made some net bearish progress on the day between the open and the close. The close being down below the previous close, the sellers are keen, and the sellers closed the market in control by closing down at the low. The large shadow on the top of the candle highlights the downside price rejection when the market interacted with this previous support and resistance area around 1080, and the sellers came in force and sold the market to close down at the lows. So the buyers had lost any commitment that they had throughout the trading day. This market is now set up for a potential change of trend to the downside again, with this being such a bearish day. And only thing for the bears is that the market is now trading down at the bottom of the cloud, and the cloud potentially offers very strong resistance around this area. If we do have a breakout down below here, then we will have the market changing from being in a neutral mode because we're trading within the cloud in the longer term time frame to being negative. So that could be quite significant for this market. If the market does have a fairly bearish close down below the cloud, then we have some support offered around the 1057 area from this previous swing low, and then there isn't any support until we trade down to around 1041. So we could see the market fall potentially 20 points from here if it does. If we do have a solid bearish close down below the bottom of the cloud. Now we've also had a crossover of the Tenkan-sen below the Kijun-sen, which is a bearish signal in Ichimoku chart terms. So we have a bearish signal here, but that signal occurred within the cloud, so it's only still a moderately weak signal. If that signal occurred up above the cloud, then it would have been the weakest signal. The next weakest signal is one that happens within the cloud, and the weakest, or the best for the bears, would be one that happens below the cloud. So this has occurred within the cloud. Now, if the trend does continue to the upside, and it doesn't really look as though that will happen, the market will need to trade through this 1080 level that's offered itself as a fairly decent resistance previously. If the market does continue to climb, then certainly there is potential resistance at around 1090 and 1093 offered by the Tenkan-sen and Kijun-sen, and then certainly the top of the cloud around that area as well. Anywhere within this cloud may offer potential resistance to the market. So the market is also trading down below the Tenkan-sen and Kijun-sen, which means that it's negative in the fast-term and medium-term time frame. So a fairly negative market. Essential that we watch the area down around the low, and certainly the low of the previous day around 1064, for a potential breakout below the bottom of the cloud, and a test of the 1057 area, and then perhaps a test of the 1041.